The market is still struggling to break through that $69,000 level for Bitcoin, and the altcoins are taking a little bit of a dive once again. So in today's show, we're going to assess what needs to happen before we actually see these altcoins begin to rally. We're also going to have a look at the state of the Bitcoin market and what would happen if this key level gets taken out to the downside. That might be the point where we have to start to change our bias and look for a much longer term correction. So smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. And if you're sitting at home and you feel like giving a round of applause, then please do that. I have a new soundboard at home, which I'm very excited about. So let's continue. Now, one reason that you're seeing a little bit of trouble over here within the altcoin sector, as well as Bitcoin on both the hourly and the daily, you can see it turning red over here, right? Is got everything to do with the dollar, right? The DXY dollar index continues to show signs of strength. And we covered this quite a lot last night on the Wales School live sessions that we did. And the reason being is because if you look at the weekly time frame for the dollar, this is a mega significant level, right? You can see that the dollar has been uptrending, right? The dollar has been uptrending for the longest period of time. This is literally a multi-decade uptrend, which started over here in 2008 in March. And what happened over here, obviously parallel, moving towards the upside, grinding higher and higher. Of course, we hit that peak over there and consequently had a big drop off on the DXY. But now it is ultimately range bound between the gray zones, right? So those are the gray zones. That's the range bound environment. And we're looking for the possibility of a deviation back into that range. But when you zoom in and you have a look at where we currently capped, well, this is a very key level of support. And not only that, but you have the middle of the channel, which lines up actually also as support. So when we go down onto the daily time frame, then that's what the picture is, right? The picture is a lot of support within this particular region, that being the strong horizontal high time frame range high. You also have the middle of that parallel channel, which is rising towards the upside. And now on the daily time frame, you can see the 200-day moving average, which is the yellow one, has been basing price off there as support. So with that being said, until such time as we see an actual break below these key levels and it holds underneath the gray box like that, gaining acceptance below, the rest of the risk on assets are going to struggle to move. And there was a presence of, not a picture perfect, but there was a presence of head and shoulders formation over here with the neckline. And that's really the level that needs to break down to potentially start to confirm a breakdown to this target over here, which will confirm that the DXY is actually pulling back. So that's been one of the longer term plans. But until such time as we actually see that take place, risk on assets are going to struggle, which is also why you have the stock markets pulling back ever so slightly. These are the key levels. These are the support zones over here. We have the S&P 500 on the top side over here with a measured move down to about 1.35% before you hit the next major level of support. You have the NASDAQ, which is still at all-time highs over here, but it could also pull back with the rest of the market. And the Dow Jones, which also recently printed all-time highs, is now currently pulling back with support levels coming in at 37,892. And then the next major one, of course, is going to be lining up over here with the 200-day moving average. So we'll watch this tentatively. Coinbase, which is right next to my head over here on the bottom left of the chart, you can see also range bound, pretty much finding support right now in the middle of that range. So that is a key level. So a lot needs to happen for Bitcoin to continue to push up. And there are some warning signs, which I'm going to go through in today's show. I want to show you if this certain level gets lost, what would most likely happen next. You could be in for a deeper correction. But until then, we have no confirmation, and the bias does still theoretically remain bullish because the quarterly chart looks like this, right? Look at that massive candle towards the upside. Price came down, bears tried to take control, failed, bulls regained control, bringing price back to the top side over here. And ultimately, we're waiting for a break above the yellow zone to break out to new highs on the quarterly chart. And it could happen if the M2 money supply continues to remain positive year on year. It's moved positive for the first time since 2022 in November, crossing above the zero line over there. And as long as this trajectory continues to push towards the upside, ultimately you may have that continuation on Bitcoin and risk on assets. And then if you look at the Bitcoin spot ETFs, again, a measly little positive inflow day, but nevertheless we'll take it as a win. It is a positive inflow day with BlackRock and Fidelity taking the win in yesterday's trading, right? So let's have a look at the higher time frame. Now, the reason I want to bring up the higher time frame over here is just in the event that we do take out those lower pivot levels, which I'll bring up in just a moment. If those levels get taken out and we do happen to go in for a deeper correction, I just want to show you the overall time frames and the picture over here of why it would then most likely transition into a right translated cycle, which in simple terminology just means a longer bull market, right? A bull market that you can take it further to the right? It's going to be longer. If it's a left translated, people are expecting a blow off top scenario, and that's not necessarily going to happen, right? I've said for a long time, my base case is that the cycle is going to play out very similar to the prior cycles, which you can see from prior top to top is 49 months, prior top to top, 46 months. So if you go in that same vicinity of prior top to top, well, you'd be looking at probably somewhere within 2025, right? It could be either in the first quarter or the third quarter, and that just purely depends on where your anchor point is. Do you anchor from that as your first top, or do you anchor from this top to top over here being 46 months from these candles? So that would be the variation. Now, if prices do take out those lower levels and we do start to see a major pullback within this region over here, it will get very, very scary, right? You could come down into this $40,000 region, but you can see how that would still make a macro higher low, right? You got your major high low on the monthly time frame, your next high low on the monthly time frame, and you would still be missing the next one, right? So if you do see a third higher low within the making over here, this will create a lot of panic and shake out the majority of the market, and it will allow more time to pass, which is actually very, very healthy for the market for further continuation into that right translated cycle, whether it's going to be there or there. All that we know is that some point then in 2025, Q1 or Q3, you're looking for a major cycle top. So with that being said, let's continue. As it currently stands, though, there isn't really any major reason to fear yet because, of course, while price is above the key levels, you have your orange zone over here running all the way horizontally. That's been a pretty significant level. You have a wick that shows major demand on this candle over here that occurred on the 29th of April. Big bullish candle, sending price towards the upside. That also just so happened to hit the 21 exponential moving average on the weekly time frame, which ultimately governs the trend. You have the stochastic RSIs crossing back above the 25 mark or the 20 mark, the green horizontal, which is a pretty clear level where bulls will start to take control and regain momentum. So long as we continue to oscillate and bounce around in this yellow box, which currently is situated between about $66,000 and $73,000, that becomes your trading range where bulls will build up enough momentum to hopefully send prices higher. And here's another chart, right? Just giving you a little bit more perspective in terms of where your next levels of support are. If you mark it off on the line chart using the Bollinger Bands as well, you can see the middle Bollinger Bands coming in as support over there, currently at 60,000, but slowly but surely it's grinding towards the upside over here. So you can expect if price continues to come down, it should still find support in that $63,000 region, which should create a higher low in relation to this candle on the left-hand side, which is key support at $61,000. But with that being said, if you do start to break below these levels, we really have to start to change our bias and our viewpoint, and then you could be looking all the way down to the lower Bollinger Bands, which as mentioned is in that $40,000 region, which would then theoretically play out what I just showed as a potential scenario for a macro higher low into that zone, right? So we will touch more on that as time passes, but if bulls don't start to strike back very, very soon and take back control in the market, it may be something they will have to consider, because if there aren't enough buyers coming into the market or stepping into the market, people get bored and start to slowly exit. And if you want close first-hand experience on something like this, go and look at the meme coin sector, right? Trade these low caps that are launched on Solana, the meme coins on Solana that are, sub $1 million market cap, and you'll get a very quick feel for what I mean, right? Price moves up very, very quickly, and then ultimately it just stagnates, and that ultimately leads to sellers stepping into the market. There's no buyers, only sellers, and consequently price has to distribute to what the rest of the market deems fair value to start to step back in and find major levels of support. But not of major concern yet. I just want to open up your mind in the event that something like that takes place. You guys know, you haven't heard me speak of bearish things for quite a long period of time, but the market needs to move quickly if it is going to move. That's all that I'm saying. And again, it's not going to happen today in one candle. If it were to distribute, we'll speak about that at a later date. Now, if you do want to learn more about how I think about the markets and what I'm looking at, then use the link in the description below. Sign up to Whale School. As you can see, there's 0 days, 0 hours, and 0 minutes left because we have officially started. We had the first live workshop yesterday, but a lot of the people were asking on the workshops if they could please invite their families and friends. So we said that we would extend it for 1 more week, 7 more days for any of you that do want to join. Use the link below. Remember, this course is valued at $3,000, but you're getting it entirely for free thanks to the sponsors. When you use that specific link that's in the description below, just go through here because we found there is actually quite a lot of scam sites out there that are trying to get your information. So please click that link. That way you know you're going to the right place. And I think that warrants a round of applause. Okay, guys, I'll get over the soundboard soon. Just forgive me. I mean, let me have fun with it for a day or two, and then we'll be back to normal shows. So if you look over here at BTC on the 5-day time frame as well, we're using our short, medium, and long-term moving average, which for investors, this is typically something that works out really well if you stick with this as a trend, right? So you got the 3, the 9, and the 30. So the 3 is going to be the yellow, the 9 is going to be the green is going to be the 9, and then the 30 MA is going to be the purple one over there. Now, currently, this gauges when you have pretty strong uptrending moves, right? If you look over here, once price reclaimed all of those, you now had the yellow above the green, above the purple, and that started to signal that you need to be long, right? You de-risk a little bit when it starts to come down like this, but the purple really gauges the momentum of the trend, and you can see how it holds you in for these absolutely massive moves. So we're currently caught within this zone over here. The purple is moving up, acting as major support. But if you do start to break down below these key levels, again, I'm bringing up these key levels once again, which is anything above pretty much $60,000. It is going to get a little bit sketchy because at that point in time, because it's probably going to take time, right? As this is moving up, if price starts to come down and break below that, well, now you have the possibility where you're going to go in for a major correction, allowing all of this to roll over and then find support. So it's something key to look at. We need to see price break out above the $69,615 level sooner rather than later, because now you've had a long period of time and there's been failure to break above, right? Please look at all of these wicks on the 5-day chart. This is high time frame stuff. 5 days, right? Failure to break above, failure to break above. You got one candle that closed above, the next candle opened immediately at that zone. And then, so you spent a total of literally just a couple of days above that $69,000 level. And then immediately caps price down, caps price down, caps price down, pushes up, fails, caps price down. So one thing that I can tell you is that if bulls don't take out this level soon, you may be going in for a deeper correction. But the other thing that I can tell you is the second that you do take out this level, whether it's now or later, once you flip $69,000 convincingly into support with closing candles, multiple closing candles above this level, you're going to see an incredibly explosive rally towards the upside, right? You're going to see a big move towards the upside, and that will probably take Bitcoin into the deep $90,000 to even $100,000 region. So pay attention to these key levels because there is a lot going on within the market right now, whilst the majority of people have become complacent and they're not really focusing on the markets, right? And if you look over here on Renko theoretically is still bullish for Bitcoin, for Ethereum, for Solana, Casper's red, Render is still bullish, and Injective is also still bullish. So again, favor is still in the bulls court for now, right? You also had the fear and greed, which reset to the typical level that we expect to see between that 20 and 40 zone within a bull run. There it is, that found your next major high low, and price continued up. So that's a good thing. This is again giving additional support to what I'm talking about. If you do start to break below some of these key levels, we're looking at the super guppy indicator, which is the conglomerate of different exponential moving averages all combined into one. Here it is. When it's green, you want to be long within the market. But now if you do start to break below these levels again, this is why bulls need to bounce price from here soon and start to send things higher. And then, of course, attempt to break out of that five-day level, right? The $69,000 top. Because failure to do that, if you start to break below these candles over here, you have your first warning sign. That's the $66,000 region. I think if we break and hold below $66,000, at that point, I'm really going to have to consider cutting a vast majority of my positions, and I'm going to be looking for a deeper pullback. At the very minimum, for the first level to bounce off of is going to be about that $54,000 level, right? So I'm not saying it is going to happen, but please pay attention to that. We are looking as well at the corrections in terms of both price action to the downside, so percentage drawdown, and timing wise. We've played out the percentage drawdown to the T, that being around that 22 to 23% drawdowns within a bull market. But remember, prior bull markets have brought in, in the region of 30 to 40% drawdowns. But we can argue that, maybe this market is a little bit more mature because we have institutions which have come on board. So therefore, maybe the further end is going to be the 25, 30% region. And we've played out 23%. Timing wise as well, we're really nearing the end of that. We've said that by the 24th of June, we would officially be at one of the longest corrections, that being 102 days. As it currently stands, we're 77 days into this correction. We've deemed the correction to be once the local top was confirmed and you came down to the ultimate low. And when you break out to make new highs, that is the end of the correction, right? So 77 days in. Now, we can also look at this chart over here, which shows that, again, short-term favor is there for the bulls because price is hitting a very, very key level, that being the mid-range level, right? We are now below the pivot level, which means the RSI is trending down. But we've also identified that every time the RSI comes into the 50 zone, which is your white line running across the screen, then price tends to bounce, right? And we can look at that, right? This is the previous times. Throughout the rallies that we've had over here, all these circles denote when the RSI hit the 50 zone, hit the 50 bounces, hit the 50 bounces, hit the 50 bounces. Here again, hits the 50 on the RSI over there, which was your range low, bounces, hits the 50 on the RSI range low, bounces. Now we're about to hit the 50 and we're coming into the mid-range level. So we're still going to treat it as a range. Now, when you're trading a range, you want to trade the extremities of that range. The mid-level is not the extremities, so it would be a low probability long. Your higher probability longs are going to be at the extremities, which is going to be the range low, or your shorts from the range high. So with that being said, let's monitor this very, very cautiously. Just below that, you do have the 200 EMA on the 4-hour time frame, which is rising. That's at $66,000, and that is a support level, right? Let's go back onto this chart just to remind you of those zones. It's this level over here, the big candle that we had towards the upside. If price goes below that, which is 66,200, we might have to consider flipping bearish. So just to make that very, very clear, it's all coming down to a T right now, and there's a lack of bid within the market. There it is. You can just see constant chop. If you're a high leverage trader, you're going to be getting absolutely wrecked in this market. It's better to just wait for an extremity on whatever trade you're taking, right? The range low or the range high before taking your trade. If we look over here, let's quickly see the CVD. Okay, so we got about, it's still relatively even. It is negative over here, but it's 284 short liquidations versus 203 longs, showing that indecision within the market. If you do want to learn more about these things, the flows and looking at the order books and things like that, remember, we are covering it in WELSH School. Use the link in the description below, sign up. And CoinW are actually also offering something when it comes to joining this WELSH School cohort. It's called the WELSH School Masters of the Markets. So you can win up to $1,000 when you sign up to Well School using their particular link. There is a link in the description below. Check that out over there, and then let's continue. So range bound within the market, where's most of the liquidity, on the top side or the bottom side? Well, it's arguable, right? You got a lot more now long stepping in the short term. So you have liquidity down here at 66, but you have a pretty thick order coming in at 74. So what does that mean? Well, look, personally, I don't want to see price come down on the 4-hour time frame back into this zone again, because you've hit this too many times. 1, 2, 3, 4, 5 coming here as well will mean that you're clearing below the 66K level, which I just showed you was significant, right? I just said on this chart over here, we don't want to come back below that. If we come back below that, we might have to reconsider. So that leaves one option over here in terms of longs. We need to see price bounce pretty much immediately. You want to hold that 200 EMA on the 4-hour time frame, sweep that low maybe, and immediately get sent straight for the top side liquidity, which is above the range high at $74,000. That ultimately remains the plan, and stop losses pretty much are below the 200 EMA. That's what we're looking at over there. That's the shorter term plan that we're following, right? So let's continue. What about Ethereum? What's going on in Ethereum? It's been a hot hype narrative as of late, right? James says this is almost certainly the engagement that we're looking for on the S1s, right? Following the 19B4 approvals. Remember, they approved the 19B4 approvals, but the S1s are what allow for Ethereum to actually begin trading live on the markets, right? So issuers and the SEC are now working towards a spot Ethereum ETF launch. And you can see over there, this is iShares Ethereum Trust, which refiled, right? And BlackRock also filed an update on their S1 version. So we'll pay attention. That could be coming out soon. That might be the much needed catalyst to bring new liquidity into the market to stop the breakdown of Bitcoin, right? If Bitcoin breaks down, we're going in for a longer term correction, and then it's going to be a right translated cycle. So let's have a look over here. Chris K says every dollar, though, that comes into the ETH ETFs is going to have a 4 to 32x bigger impact on Ethereum price compared to Bitcoin, because simply the market cap's different, right? And the daily issuance is also very different. So if you look over here on Ethereum, it's much smaller. The burn is not shown here. So when you look at the burn rate of Ethereum, then it means the supply actually shrinks on certain days. So not only is it lower than Bitcoin, even on certain days, it's shrinking. So some predict that, ETH is a 5-figure coin, which right now is trading at about $3,600 to $3,700. But ultimately, by the end of the bull run, that could be a $10,000 coin, which means that, it's one of your lower risk 3x trades. If you want to get 300% returns, a 3x gain, ultimately, Ethereum might be one of the safer bets. So let's look over here. What does the chart actually say? Well, we've hit the key level. You're starting to get a little bit of a rejection over here on the ETH BTC chart, which is on the left-hand side. That level being the 0.055. You can see over there, opened, or at least the candle opened down here, closed exactly last week at that level, right? Failed to get above. Shows you how significant those key levels are, right? When you mark out your quarterly levels, your monthly levels, you'll be absolutely incredibly amazed at how it lines up with the chart and how the price levels respect that. So that's exactly what we've seen. And the next candle, right? Yes, it spiked above temporarily, but technically the candle opened again right at that 0.055 level, and now it's starting to come down. So with that being said, we did hit the yellow fair value gap that caused the bounce over there. But I told you multiple times that the trend trumps all, right? The trend trumps all. You got lower lows and lower highs, lower lows and lower highs. So we need to see a proper shift over here where if it does come down, we want to form in another high low. And I would remain patient before switching from Bitcoin into ETH, right? I would remain patient looking for something like this, right? Maybe you're going to reject over there. Just quickly get that again. Where's that little pen? There you go. Maybe you're going to reject from there. Then you're looking for high, low, proper high, high. And then maybe the next one you can buy pretty much at the same level. Rather be safe than sorry. As for ETH USD, which is on the right-hand side, this is your chart. These are your key levels. If you do get something like this that comes down into 3,400, that's going to be a pretty strong area to bid with your stop losses below there. And you'd be targeting up to the top side with your first TP coming in at the range high. That's for those of you who are looking for, a bigger, longer term swing trade. That would be the opportunity from here to here as a percentage. That should give you about a 40% move, and it likely pauses there temporarily, has a small pullback, and then breaks through at a later stage. We also saw Bitcoin dominance now with an official candle close outside of the falling wedge or the rising wedge formation, which is a bearish formation, expecting the breakdown of Bitcoin dominance, right? But there can be fake outs, so we need to wait for a bit more information. We close one candle there, we open the next candle over here. This candle is pushing up as ETH BTC starts to come down, and altcoins suffer against, of course, their Bitcoin pairing, which you can see very, very clearly over here on the Banter Bubbles chart, right? Look at those altcoins. The other thing that you can do is also go into the settings, and you can literally change this to measure it against Bitcoin to see. There you go, let's have a look. How are these coins doing against Bitcoin? Okay, I think it's still loading. Is it loading? We'll come back to it. It's still loading over there. But nevertheless, we want to see multiple candle closes below this level and breaking below the mid-range. And then really, this is the level to break down is 52.22%. So a patient trader will be rewarded much more than an impatient trader. And if you're patient, you'll be waiting for something like this, right? So this would more be the trigger plan of where you can start to say with full confirmation in this zone. That's where you are breaking down, right? So you're expecting this, comes down, closes below there, probably has a little bit of a spike up, sets in the lower high, and boom, we can convert our BTC into altcoins on this lower high, and then we're expecting a major breakdown. At the same point, DXY most likely starts to break those key levels at the same time, and that should lead Total 3 to move towards the upside. And all of this starts to fall out of bed. All these ideas start to fall out of bed, of course, if Bitcoin starts to break down below $66,000. That's your first major warning sign, right? Lose $66,000, you have a warning trigger, right? Please mark that off on your charts. Warning trigger below $66,000 on closing candles on the daily time frame, and then there is trouble looming. So until then, though, Total 3, also the expectation is that we have bullish demand over here, failure to break down on the weekly time frames for multiple weeks. So it's creating a long-term consolidation. And one thing we know for sure is we're gearing up for a big move. The other thing that I like about this chart over here is one of the most reliable chart patterns out there is always going to be the ascending and descending triangles, which you can see over here. If you mark that off over there, what do you have? Well, you do have the presence of an ascending triangle, which is currently forming, right? These are bullish patterns. So you're creating higher lows and equal highs. If you can consolidate into this triangle, these triangles tend to have measured moves, which will break you up above this $1.1 trillion mark for Total 3, which at that point, Bitcoin dominance probably breaks down and altcoins rally. So certain altcoins are doing better than others, right? One that's starting to pick up the ranks over here is Brett. Brett's about to become the 7th meme coin to make it now into the top 100. So Brett is, of course, on what do you call it? Coinbase. So it's on the base chain, which is a layer 2 that's built on Ethereum. And we've speculated that maybe in the future, when we do eventually see a proper alt season, that a lot of the market participants are going to come to base chain. And the reason why is because, of course, Coinbase is one of the biggest platforms that on-ramp people. And, of course, they're going to give them direct exposure to their chain. Why wouldn't they? Of course they will. They're going to make it easy for people to come into that chain. So probably time to start to at least look at some of the utility tokens, because I agree with Elio Trades over here. You get this thing called a hated rally. It hasn't happened yet. As traders, we look for confirmation of that hated rally taking place, but it's always good to fundamentally position your mind for what could come next. So assuming Bitcoin doesn't break below $66,000 and we have continuation of the trend, Elio says the more hated real utility projects become, the more interested he gets in buying them, right? The real hated rally is staring you down, but you can't see it yet. The hated rally being that, the utility tokens that are meant to be the strong tokens have completely underperformed the rubbish meme coins. So some of the coins that I've been looking at is a new one over here, and we're fortunate to partner with them very, very recently at Crypto Banter's Solidus AITECH. If you look at the chart over here, it's been floating onwards and upwards. Here's your chart, at least if you wanted a proper candlestick technical analysis version. You had, of course, a huge move up over here, and then it did start to bleed out, but it's found major support within this region. So here it is. What do? Ultimately, they're a platform that's got the GPU power for a whole bunch of different AI projects. So they own the licensing to that, and projects are able to build on them, right? All AI projects are able to build on them. Check them out. Fundamentally, I believe this is a pretty strong bet on the market. I had a long conversation with the team, and what they're building is absolutely phenomenal. You also have the opportunity to get into seed, private, and public sales on their chain, right? Or at least on their platform. So they do offer a launch pad. There is a link in the description below. If you want to learn more about them, feel free. The link should be over here. Here it is. Solidus AITECH. Go and have a look at them. I think that with AI on the rise, it's a very strong bet. And not too many people know about them yet. So go and check that out. There's your chart looking really good. So let me know as well in the comments if there is something that you want charted over here. And we'll start to go through those altcoin requests. Another thing I was looking at over here was 𝗃𝗃. 𝗃𝗃 is a pretty high confluent region over here, in the sense that, you know, it's been respecting this parallel channel. You can see that was prior resistance over there, support, and then of course highs. So respecting that parallel channel towards the upside, which is why we marked off those zones. And then of course, this is also the horizontal range that's been respected. And now you have confluence coming in at the mid-range with the upsloping part of the channel. So that could become quite a strong buy area. If those of you out there have no exposure to 𝗃𝗃 and you want exposure, well, that would be a good zone, right? That 6 cents region, I think, is a pretty solid entry on something like 𝗃𝗃. So I'm going to get to your altcoin requests in a bit. I can see over there that what you're asking, RUNE, Velo, Dog, Injective. We'll get to those in just a moment. Let's quickly finish off over here with some of the things. So, I mean, guys, I don't want to get canceled. I'm not even going to say anything, but just watch this.
Jenner is now live on Ethereum. Let the trading begin.
Okay, cool. Some people are confused in life, but I don't want you to be confused, right? Prepare for round 2. If you go and buy this Jenner token, this is what's happened previously, right? Kevin Hart, Confessions project. Confessions by Kevin Hart. Current state, dead, right? It's down 76.66%. Let's keep going down the list, right? If you go over here, let's go to Shaq over here, 91.87%. Ozzy Osbourne, down 98.12%. Kim Kardashian, 99.98% down. I mean, guys, keep going down this list over here. Feel free to familiarize yourself, and you'd think that Snoop Dogg over here with Baby ETH also ranked down 100%, right? And if Snoop Dogg couldn't get it right within the crypto market, then I don't know who can. So I don't think that you should be playing with these celebrity meme coins, is my point over there. Please. Over here as well. I think this is absolutely incredible. They got PayPal now officially available. So if you're using PayPal USD, it is available over there. And then if you go down below, which I don't have that info, I can't open this over here. You'll notice in the blurred section over there, they now have Bitcoin as a wallet as well, which is absolutely incredible. So 0 transaction fees. The payment apps within the financial apps on, I think it's the Apple Store, which is pretty significant, or might have been the Play Store, but on one of those. Also, meme coins, right? Powerful. PEPE is now worth more than every single major NFT project across blockchains combined. There's all your NFTs. There's PEPE. This shows you the meme coin super cycle theory may actually have been correct, right? So with that being said, let's actually have a look at some of those meme coins. I'm going to quickly go through the list over here. Let's see. Okay, we'll quickly see what's happening over here because they had massive moves towards the upside, and of course bleeding out over here, bleeding out. But nevertheless, your ranges and your invalidation zones are enormous on these coins, guys. This is why you have to take much less risk when you are trading these meme coins, because where are you incorrect on this trade? Well, 35% down. When you break below those lows, then of course it's over. Here you got this one over here was one of the trades that we gave if you were desperate to take a long. I would at this point already start to look to stop out, purely because if you look at that candle, what are you seeing, right? It's a major topping candle over here. The chances are that when the cat is probably going to come all the way back down into the zone. WELSH, okay, getting obliterated compared to the rest of the coins. Look at that major bottoming formation down there. Shiba Inu also puking up the gains over here. POPCAT coming down. This is your range level. You might get some opportunities though on some of those other coins like WIF. If it comes into the bottom of the range, we'll get there in a moment. But POPCAT, that's what you're looking at, a move down to 36. PEPE, look at that. Big bleed, right? From top to bottom, what is that? It's lost 21%. Huge moves towards the downside. Let's click through MYRO. Also a major top, right? Look at this key level over here. Major top. That's a key level. I mean, to me, MYRO actually almost warrants taking a short trade over here. That's actually enough for me to start to build a short. Any spike that you get over there based on what that candle looks like, I'd be willing to put a stop loss above and actually trade this all the way back down. So MAGA. Of course, Trump was one of the hardest ones over here and giving up all of those gains very quickly. I would wait for the dust to settle on something like this before getting in. You might see something like that. I think it's going to now take some time. Quick up, quick down, right? That's the nature of the market over there. Let's go to WIF. So there's WIF. We said we wanted to get an entry over here, probably somewhere near the bottom of the range, which is going to be $2.26. We have not yet got that, right? We haven't got that, so we'll pay attention. BONK also giving up those gains, right? Still failure to gain acceptance above this white zone over here, which is going to be coming in at the last digits, 378.349. So failure to get above that means that, of course, it's going to go through a bit of a deeper correction over there. So definitely going to be some meme coin traders out there in a little bit of pain this week. Is there anything that looks good, though? That is the question. Let's just quickly pull this up over here. Is there anything at all that looks good? I'm going to quickly scroll through. Okay, POPC. But in relation to the last move, that's nothing. DUSK. So these are some of the real world asset plays coming into resistance over here. So be careful of that as it pushes into resistance. Let's just quickly look at Mantra. How's Mantra coming down? ONDO, top performer, also coming down pretty hard over there. That is at the mid-range. Mid-range, you want to see it hold at $1.11. Let's quickly scroll through the list. What else have we got? Anything else green on the day with relative strength? Crown, not really significant. I mean, that's just a small little pump. What else? ORDI, how's ORDI doing? Also nothing too amazing, but it was at support over there. So the whole market is getting absolutely smacked over here once again. But if Bitcoin can defend $66,000, then a couple of weeks from now, 2 or 3 weeks from now, this all could have been a pretty major buying opportunity. Let's look at some of the crowd favorites like Solana. Of course, this is a significant zone at 160. You want to see Solana hold that. Failure to hold that, Solana may literally revisit all the way back down to the next key level, which is 120. NEAR, how is NEAR doing? Okay, rejecting from near the range highs over there, coming down. You do have a little bit of a trend line which is formed over here. So let's see if you can hold that as support. Prices need to bounce very soon or there is going to be trouble within the markets. What else have we got? Let's go through. Let's see. Okay, I'm going to quickly go through to RUNE. Let's go to RUNE because I know a lot of you are in the RUNE trade. Okay, and you want to know what's happening with RUNE? Well, so far, that's not looking good, right? A rejection. If you take out these lows over here at $6.26, it is going to start to look pretty bad because what do you have now? Well, then you have a break of structure, right? You have your first lower high taking place over there. These were all higher lows, and now you're going to be creating a lower low, which means that the next bounce over here is probably where you'd want to start to exit, and then you're watching for a deeper correction over there. So if prices bounce back quickly and you see this as a wick over here, then yes, RUNE could potentially continue its mount towards the upside, and getting above the $7.20 zone is going to be of major significance. So if you do want to learn more about that, guys, again, one more reminder, Whale School is live right now. You can join entirely for free. And then here's the Whale School Masters of the Markets again from CoinW. This is the criteria for how you get up to your $1,000 in USDT. So it depends on how much you deposit, right? If you deposit $100 or more than $100, your bonus will be $100. If you go all the way up to $10,000 or more, they're going to give you $1,000. So what does it mean? They're giving you basically around, well, here they're giving you 1 for 1. But on the higher end, you're getting about 10%. So the link is below. Let me know if there's anything else that you guys want charted. And then also, guys, remember that from next week, right? From next week, Monday, I will be on Banter Plus. So if you come here, you won't find me over here. I'm going to be on Banter Plus. So make sure you subscribe to that channel as well. And then let me know in the comment section what it is that you want charted for the next show. Until then, I'll see you all on the next one. Have a great day and cheers for now.